Welcome everyone, thanks for joining. In this video, we're going to be talking about Facebook and why I'm buying more of this stock right now. Now, I decided rather than focusing this video primarily just on Facebook and the specific issues going on, I wanted to give some insight into my broader investing philosophy. The reason why I choose to buy companies that have bad news going on. You might see a trend here. Alibaba is a company that has a ton of bad news going on. I'm buying more of this company. Facebook is another company that has headline after headline about it's toxic, it's big tobacco, it's the big bad company, and Mark Zuckerberg is the devil himself. And the stock prices came down. Yet I'm buying more of this company. In either case, whether it's Alibaba or Facebook, or whether bad news comes out and drags down Amazon, if it's a high quality company that's going to compound its earnings in the future, and it's being dragged down by news, I'll likely be buying more of this company. And I want to explain why. Now, before we jump specifically into this topic, I want to do a quick update on my portfolio. This is the Story Fund. It's my portfolio. It's my money in it. The goal of this portfolio is to compound money as quickly as possible and to at least outperform the S&P 500. That's kind of the minimum goal, is to beat the S&P 500. If I don't beat SPY, there's no point in running my own portfolio. But beyond that, I want to compound wealth as quickly as possible. This is the type of companies I'm investing in, companies that I think will outperform SPY over the next 5 years. Now, I do something different than most content creators in the financial sphere. I actually show my performance on a weekly basis, benchmarked against the S&P 500. So you can see the entire history here. There's been periods of outperformance and underperformance. Right now, we're outperforming the S&P 500 by about 5%. We're up 19.93%, while the S&P 500 is up 15.85%. Now, like I always mention, even though we check on the performance of my portfolio against SPY every single week for the sake of transparency, I'm still very much long-term focused. So I don't really concern myself too much with the week-by-week performance of the portfolio. It's fun to look at, but what I'm really interested in is the long-term performance of these companies. How big will they grow? How much will their market cap move upwards? Will they compound my wealth over the next 5 years? That's what I'm really focused on. Having said that, let's go ahead and talk about Facebook. This is a stock that I've been invested in for a while. I've realized the fundamentals of this business. I currently have around $6,300 in value, with 715 being gains. So far, I'm well in the green on this company. But like I mentioned, the stock price has moved down quite a bit over the past month, and the reasons why are mostly, in my opinion, surface level. That's right. I think that they aren't really valid reasons. And I can go over the specific examples. We can look at the entire report from the Wall Street Journal. This is it. This is the big bad report from the Wall Street Journal looking at their internal company documents. Facebook knows Instagram is toxic for teen girls. Company documents show. This is the Journal. This is what they said on the front page. They told the entire world that Facebook is toxic. And of course, the stock price dropped. So let's go ahead and just examine this claim as an example. This is fundamental to the entire argument that Facebook is toxic. And most of it originates from this piece of data right here. Now, if we blow up this piece of data, that image there, this is what it looks like. So we can take a look at it ourselves and examine this data. 1 in 5 teens say that Instagram makes them feel worse about themselves. This is the whole foundation of Instagram being toxic and being like big tobacco, right? It needs a warning label. It needs a Surgeon General's warning that Instagram is toxic, because 1 in 5 teens say that Instagram makes them feel worse about themselves. Okay, let's go ahead and look at the actual data. This is a survey that was given out to thousands of teens, and this was the distribution of their answers. 1 to 2% said Instagram made them feel much worse. Around 20% said somewhat worse. Around 50% said no effect. Around 25% said somewhat better. And around 5% said much better. So there's a spread between teenagers that some of them felt worse, most of them felt no change, and then a good portion felt better. More of them felt better about their self-esteem after using Instagram than felt worse. So another way that you could accurately phrase this study and give it a different title that would be equally as true is saying 30% of teens that use Instagram have improved self-esteems. That would be equally as true as saying 1 in 5 teens say it hurt their self-esteem. Both of those are true. This is the full context. This is the full data. This is the entire premise of saying that Facebook and Instagram is toxic. Another thing that this study lacks is any type of benchmark or context. Okay, so 1 in 5 teens say that Instagram made them feel worse about themselves. It hurt their self-esteem. Well, what if we did the same thing for reality television, or we did it for Reddit, or TikTok, or YouTube, or we did it for the modeling industry, right? All the clothing brands and all the modeling brands. Does that make them feel better about themselves? What about school, just high school? What if we did a survey when teenagers go to high school for a few months and they attend and then they come back and we ask them, do you feel better about yourself? Do you feel worse? Do you think 100% of them would say, I feel much better about myself? I don't think so. I think a good portion of them would feel worse. School is tough. There's people that are mean at school, just like there's people that are mean on Instagram or Facebook. Anytime there's any type of social interaction on a large scale, there's going to be a portion of people that have a negative experience. So in my opinion, this whole scandal, this entire whistleblowing in and of itself is on very weak foundation. There's no benchmark. They're not comparing it to anything. They're not comparing it to normal daily life or school or television or magazines or TikTok or any other platform in existence. They're just looking at some data saying that for some teens, they have a negative experience, and then they're labeling Instagram as big tobacco because of that. Like I said, I think that the data here shows a very different picture than what's being illustrated in the media. Now, you might agree with me or disagree, but on this particular subject of whether or not Instagram is toxic or it's more or less toxic than X, Y, and Z, I really don't care to debate it. I don't care. It doesn't matter. It's aside from the point. It's just something to argue about during the day, and I don't care to argue about it. The point that I want to make overall is that anytime this type of news, with things being labeled as toxic and going in front of Congress and having these meetings and it dragging down the stock price, I think in most cases, it's a buying opportunity. I think in most cases, it's superficial. It's not a fundamental reason the stock should be trading lower. And I went ahead and actually broke this down into 2 categories. It's called shelf life, and this is how long this news will affect the stock price of the company. And there's 2 basic categories. There is the short shelf life, and there is the long shelf life. Off to the left, we have short shelf life. This is things like the CNBC pundits and their daily opinions on what is a great stock to pick up that day because of XYZ reason. Most of those are very short shelf life opinions. That stuff only matters for a few days until the next news comes along. The next thing would be quarterly earnings. We can look at these, they can give us some indicator, but after a few weeks, the next thing that's in the minds of investors is the next quarterly earnings. They're no longer focused on the ones that just happened, they're focused on the next one. We just had JP Morgan's quarterly results, now investors are looking to the next quarter, right? This has a very short shelf life. Then we have politics. Facebook is constantly wrapped up in politics, and politics has an incredibly short shelf life. This is the big argument today, is Facebook. Tomorrow the argument will be something else. Politics is very insincere. It's quick moving and it jumps from thing to thing. The shelf life with politics is incredibly short. Most scandals are short-lived. We can look at the example of Cambridge Analytica. This is another big scandal that Facebook faced for like a couple months, and the stock price plummeted. It plummeted over 40%, and now it's up, I think, 2.5 times since Cambridge Analytica scandal. Investors that bought during this time, knowing that it was going to be a short shelf life, profited heavily. We also have YouTube clickbait. Thumbnails of the market flipping left and right, the market's just flipping one direction and another. That is short shelf life. So this is stuff that even though I can pay attention to it, and it's good to identify if this is affecting the stock price, because this stuff can make it so a great company becomes a good buying opportunity. In this case, I think the example is Facebook. This is a great company that now has a buying opportunity because of stuff that I think is a very short shelf life. Off to the right, we have long shelf life. This is the stuff that affects the price of the company over a long period of time. It might not affect it in the short term, as the stock market is a voting machine, but over the long term, the stock market is a weighing machine, and it will weigh the long shelf life material a lot more in the long run. We have leadership, number 1. If the company has competent leadership, that can grow its products, grow its business, the company will do better. So the leadership of the company is something that will affect it for a long period of time. Facebook has good leadership. This company has great capital allocation. They've made great decisions in growing and expanding their business. Moat, this is something that has a significant impact on the long-term viability of the company. This is long shelf life stuff right here. Facebook has arguably one of the best moats in the world. They have a catalog, they have a network of users that is almost 5 times as big as the next closest. So if you're counting companies like YouTube or TikTok as competitors, Facebook has 5 times as large of a user base. That is significant. The moat and network effect is incredibly strong with Facebook. This is what drives long-term results. Valuation is another one that has a long shelf life. If you buy a company at a good valuation, you can hold on to it for a long period of time, and you can expect to have very attractive returns. That's why valuation is so important. Facebook's trading at a 24 PE ratio. This company is trading at a very low PE ratio given its growth prospects, its moat, its leadership, and all the other corresponding attributes with a long shelf life. The reason that it's trading at this valuation is because of all this stuff. All the stuff on the left here, the short shelf life stuff, is driving the stock price down. And then lastly, we have growth prospects. Facebook's growing far faster than the market average. It grows at 20 to 30% revenue growth, has good earnings growth, EBITDA growth, free cash flow growth, net income growth, so on and so forth. And at the same time, a decreasing share count, so they're not diluting shareholders. In terms of growth prospects, Facebook's are very good, and this has a long shelf life. So this is the way that I'm looking at Facebook right now, and it's the way that I look at many companies. Companies don't go down in price because of nothing. They don't just go on a dip for no reason whatsoever. There's always a reason why, and in most cases, dips in good quality companies happen because of very superficial, short shelf life reasons. Because the pundits are saying stuff, because politics is in play, because of one thing on one quarterly report that analysts didn't like, because there's some scandal going on. In the case of Facebook, that happens frequently. And you have all these things that are very short shelf life. It drives the stock price down. What will drive it up over the long term is the long shelf life stuff, this stuff off to the right. One of my favorite investors, Peter Lynch, said something that's one of my favorite quotes as well. He said, "Remember, when the coast becomes clear, it's already too late." And what he means by that is by the time sentiment changes to very positive, and everybody's now bullish on Facebook, and all the concerns and all the drama and all the news and the being labeled big tobacco has already passed us by, and it's a thing of the past, the price will already reflect it. You can't have the best of both worlds. You can't invest at a deep discount because a company's trading down due to lots of scary news, and wait for the coast to become clear and get it at that same price. You either get certainty or you get a good deal. You can't get both. Another quote that I like is Warren Buffett saying that investors pay a high price for certainty. If you want certainty, if you want great sentiment with every company you're buying, you're going to be paying a high price for those companies. So in the case of Facebook, what I see is a great asset, a company that generates an unfathomable amount of cash and has an enormous moat. It's selling at a discount because of news that I consider to be very short shelf life. And this is the same approach I take for companies like Facebook or Alibaba. I take it with Apple. I take it with Amazon. I take it with Salesforce. Any company that's high quality, that's selling down because of these type of reasons, I'm going to use as a buying opportunity. I will buy into that fear as other people are running for the exits of their shares. And I think that will offer me a more attractive return over the long run. So that's my overall thoughts on the subject. It's nothing special. And I think in the future, looking back 5 years, I think that this point in time will be a very attractive time to have purchased Facebook. That's just my opinion. But as always, the coast is unclear. The future is unknown. Nobody can predict the future, including me. And out of all the bets I make, whether it's Alibaba or Facebook or Microsoft or Salesforce, a few of them won't turn out to be incredibly good. A few of them will probably fail. So keep that in mind when you're listening to other people's opinion. Always invest with your own risk tolerance in mind. But that is what I'm doing with my portfolio. I hope you enjoyed the video, and I'll see you in the next one.